Hey everyone, welcome to the KE Report and a daily editorial with our good friend Joel Elconin, co-host of the PreMarket Prep Show. Check out Joel's website, premarketprep.com. I will post that link in the show notes. Joel, let's talk broad markets here because as we progress through the first half of this week, the markets were doing pretty well. S&P touched a new all-time high, but pretty quickly after that on Thursday and today on Friday, starting to see a bit of a sell-off. Thursday was about a 0.5% down day, and today, as we're talking, S&P is almost down 1.5%. All the broad averages are down at least 1%, almost 1.5% today. Look, Joe, there was a lot of economic data that's come out, a lot of earnings that we've digested through. What's your thought on the markets? Again, making an all-time high this week, nothing wrong with that, but very quickly reversing after.
Good afternoon, gentlemen. Thanks for having me. I think that you got to the top and you got to the top of the mountain and there were sellers. There were firm sellers there and they were selling into strength. The pullbacks were shallow. The market can lull you into complacency. And that basically is what it did. The average ranges were coming down. I think people came into the day kind of casual, like, oh, we've been range bound. We're holding up near all-time highs. Unless we get a Trump tweet or something, we'll probably just chop around. And boy, oh boy, there was some economic data that came out later, but they maybe had their seller's shoes off the opening bell. I don't know how close you guys watch the S&P futures, but I was hoping, to get shorted unchanged on the day, and it was up 2, 3 handles. And I looked, and it was 5 handles away. It was 10 handles away. It was 15 handles away almost immediately. So I think what you had is you had patient sellers up top looking to sell into strength. And today they're like, you know what? We're just going to whack this. And that's what you saw early on. And then you had some economic data come out at 9:45 and 10 o'clock. That's not exactly friendly to the market. You had your existing home sales were lower than expected. The Michigan consumer sentiment is falling off a cliff. Boom, there you have it. You have a market looking for catalysts to the upside to get through those all-time highs, and you got catalysts to the downside.
Well, and Joel, we were talking off mic that there was also some valuations in some of the kind of the mid-range stocks that were getting a little over their skis, and maybe it's just an example of people pulling some profits off the table and kind of rotating them into other areas. When you look at Palantir, when you look at Reddit, when you look at some of the hot stocks, even some of the cooling off we've seen in some of the tech leadership. Is it possible that some people are just saying, hey, we've had a great run, but I'm going to pull a little bit off the table and move it into safer pastures?
Oh, for sure. I mean, we talk about it. Valuations don't matter until they matter, right? If you want to pick one stock and you want to blame it for what's going on, I think you have to go to Palantir. That stock just having an incredible run after earnings, Wall Street analysts just stoking the fire. And then I believe it was on Wednesday, there was an amendment to Alex Karp's selling of his stock. And actually, the amendment wasn't the problem. He was actually planning on selling less stock. But what ended up happening on that same day is that Trump said he was ordering the Defense Department to cut the defense budget by 8%. So you have, a double negative, with the CEO selling, and then you have that catalyst, and that turned, and then it just, like you mentioned, Reddit, knows all those stocks, so you can group them together as the Momos. And as we appropriately named our show yesterday, Momos to no-nos. And that's what you had, that's what you're turning is in the market here.
Yeah, well, that's a pretty fundamental change when your largest, all practically only customer is the government, the Defense Department, and they might have their spending cut. That's a pretty big change in tenor for what you'd expect for Palantir. But Joe, that whole concept of lost leadership, we've been talking about lost leadership so far this whole year, and that wasn't causing the markets to crash. If anything, they were digesting all that and money was rotating within them. Where is the leadership now in your eyes?
Where is the leadership now? Whew, boy, you've had your health care, perk up a little bit this year, but, with what's looming with the new administration, I don't know. I'm hard pressed to tell you what, the rotation. The IWM, your small caps, they weren't acting like they wanted to go up the whole week. I think if you want to look for your next sector or your net, maybe there isn't one. Maybe there's not always a place to rotate money. I mean, we did discuss, coming on that, China's made a big move, right? Alibaba, if it was a U.S. tech stock trading at that kind of valuation, you'd be buying it hand over fist. But the tenor has changed with Jack Ma and Chi as opposed to him not being seen. He's been seen with them. Alibaba has had a tremendous run here, so I don't know if you want to chase it at this point. But you always run into the problem of a tweet or some negative concept. I mean, and I talked about this. I know I wasn't on last week, but I talked about the week before that if you look at what's going on in our country today, if the tariffs go through, well, when I went to school, tariffs were inflationary, right? What else could cause a recession? Well, people losing their jobs. The government is willfully firing people, and unemployment's going to go up. And you're cutting off and you're reducing government spending. So if you don't have the recipe for the R word, or you don't, I mean, I don't know how this country is going to, withstand that kind of a triple whammy of, higher unemployment and rising inflation. I mean, nothing seems to make economic sense. The market seems to realize that today on Friday, February 21st. And historically, the end of February has not been the greatest seasonality for stocks, too. So I think you got some nervous people out there that were selling in the strength and turning into just whacking bids.
Yeah, Joel, some great points there. There is kind of a triple whammy with the potential for higher inflation from tariffs, with less government spending, which was getting kind of bloated anyways. But if you reduce it down and start getting rid of people, then that's more unemployment. And then the seasonality factor. For all those reasons, I think you also brought up a great point that you don't always have to rotate within the markets. It's not a rule that money has to rotate from tech to healthcare or to real estate. It could actually go into traditional real estate. It could actually go into bonds. The bond market's had a bid today. Gold has been at all-time highs the last couple of weeks, continue to make a series of all-time highs. Obviously, people are playing for a safe haven there, and people are moving some money overseas, as you brought up China. So isn't it possible that the money people have rung the register on doesn't have to go back into the general equities? It can go a lot of other places. It could go into a money market and make some 4 or 5%
Yep.
interest.
Yep. And on a day like today, would you rather be losing 1.5% or, making a few bips? So a lot of different factors. I think another thing that, you talk about lost leadership, you didn't have the greatest, Apple did rally off its report. It was volatile. Microsoft got hit. Amazon got hit. Google got hit. And the last man standing was Meta. And after that 20-day win streak finally ended, boom, it turned. And so now, that's 40, 50, 60 points off its all time high. And then moving out of the tech sector, you had major leadership from Walmart, right? Boring old Walmart having a just historical move. And now, boom, Walmart comes out with the lower guidance, gets hit yesterday, and is lower yet today. And they flat out said it's the uncertain economic environment. So the policies that may be in place right now or talked about being in place, I think, I don't know why just today are people realizing, what the potential ramifications to be. But, it's Friday, right? And we talk about the market, making decisive moves to the higher lows for the week on Friday. I actually have a sheet written down on that I read every day, and I wish I paid more attention to. So without looking too far back, looking back and trying to look forward, I mean, who knows how low we're gonna get today, and you'll see if what kind of follow through you get overnight or on Sunday, and see if you can build a base on Monday. But the market was in a trading range, had patient sellers, and those patient sellers turned out to be not so patient, and this is what happened. And buyers are just the if you want to go to these crazy stocks with the crazy valuations, Palantir or Reddit or something, you have your Momo traders, right? And they're gone, you know, unless they're a Momo trader, shorting it. And so the Momo traders are like, hey, I made my money. It's unpredictable. I don't know what I'm going to do now. And then you have your value investors saying, I'm not touching this. I'm not touching this at this valuation. So you really have a buyer strike in these and it takes a while. I mean, look what happened, in 22 and 23 with like Netflix and Meta. I mean, it took a while for them to get to valuations that, the investors could stomach and step to the plate.
So, Joel, with what I'm hearing here, just a bunch of almost negativity around these markets. Valuations are too high. Everyone's worried about potential economic policies. There have already been stocks that have just run way, way too much in a buyer's strike. Is this a shorter's market? That five-letter word, can we say that this is a time to short when you consider that these markets are less than 2% off of their all-time highs?
I mean, once again, I'll go with my standard line. Where are you at in your investing horizon? How long have you been in the markets? When do you need money? And people don't short per se so much, but it look at stocks that you have in your portfolio, and maybe you could do a collar. You can sell a call and buy a put at the same at a lower price. There's different things you can do, but right now, I mean, I think things have turned. At the beginning of the year, Dennis and I just thought this was going to be a trading range kind of year. Well, we know where the top of the trading range is now. We'll just have to see if we can actually, the bottom of the trading range. And if you're looking at the, recent trading range of in the S&P futures, I mean, the low of the year, well, that's under 6,000. But I mean, you're only 45 handles away from that 6,000 level. I think that's going to be a big psychological level. If it comes down to 6K and doesn't hold, boy, things look pretty thin between 5,900 and 6,000. So we'll see. We'll see if we can find some stability in the market, but that doesn't look like that. But with a little bit under 2 hours left here, Bears are in full control.
Well, Joel, you bring up an interesting point about this year. People maybe have gotten spoiled the last 2 years where the markets are up 20% both years in a row. That doesn't usually happen and continue year after year. So if it is a sideways year, how do you approach trading those kind of markets? Because in good years, people get greedy and they just let their positions run. But in turbulence and volatility, some people overtrade the markets or they make bad decisions. What advice would you have for investors in a sideways choppy year?
Respect the ranges. And if you're trying to trade a range or you're trying to trade a hot stock or something, you don't have to strike on the first day. You know, a lot of times, with a stock, especially like with earnings, if they come out with bad earnings and they get hit, it just takes a couple days, for the analyst, to come out and, lower their ratings on the stock. But if you're trying to pick, some short-term bottoms in here, like I said, you don't have to strike on the first day. Maybe you make a low, 2 or 3 days after above that, above the spike low. So then if you're taking a position, a shorter term position, then you have an out on it. But like on days like this, like where's your out in some of these stocks? You really don't have one. I'd also look for meaningful retracements. I talked about Palantir this morning on my show, and boy, I'd like to see what the exact numbers were. Palantir just 3 days ago made an all-time high at 125.41, right? Just blew everyone away. In yesterday's session, the stock went down to 95.80. All right, so let me do the quick math here. 125.41 minus 95.8. So in 2 days, it lost 29.61. Divide that by 2. Add that to 95.80 because I love my retracements. Well, it didn't quite get there. I had talked about the 110 level. The actual retracement was 110.60. But look where that bounce got to this morning. You got, after hitting 96 yesterday, you got to 109. So you got to pay. The thing to pay attention, if one of your stocks has a big dive like this and you don't want to sell it in the hole, sometimes that's the best thing to do. Like something like Reddit, if you're waiting for a bounce, you're not getting it yet, but try and see, wait for a 50% retracement on some of this stuff.
All right. Look for some lower levels here. Boy, oh boy, it's an interesting end to the week, that's for sure. I'm sure investors will be a bit nervous over the weekend, but in all fairness, we've seen this before heading into weekends too, and these markets just so dependent on what the president might tweet, what news might come out of the White House. That seems to still drive a lot of these markets. But look, you've outlined a lot of, I guess, worrisome signs for this market. We'll chat with you next week to see if anything changes over the week. Joel, as always, thanks for your time, and everyone, click that link in the show notes to visit the PreMarket Prep website. Have a great weekend, Joel.
Okay. Thank you, gentlemen.